Hello everybody. So as I record this video, MSTR is bouncing back. We are well over 2x Bitcoin's performance right now. The government shutdown must have been a sell the news event. Turns out the shutdown matters for clicks, matters for media, but it doesn't really matter for Mr. Market, and Bitcoin is bouncing up on this news. So we are now showing some outperformance over the short run today, of course, but if we were to look at 7 days, we would also show a little outperformance of MSTR. In fact, if we look at MSTR over the past 5 days, we have exactly what we expect, a little more than 1.5x MSTR behaving above the price of Bitcoin. And of course, I use the IBIT Bitcoin Trust here as a proxy for Bitcoin's performance because it's the exact market hours that strategy also uses. So if you look at mNAV is rebounding. I keep saying that. People don't believe me when I say that. But mNAV is rebounding. So we had a low in September 24 at 1.38. That was the low. Right now, it's not right now. Yesterday, the mNAV was 1.46 in the classical way it's calculated with enterprise value, right? It was 1.46 yesterday. StrategyTracker.com only shows you the day before. And right now, the screenshot right now, because on strategy.com you get the live number for mNAV, we would be at 150 right now. So we moved from 1.38 mNAV on September 24 to 1.50 right now. The rebound is here. We're up, as I record this, close to 7%, while Bitcoin is up 2.7%. So the outperformance is here. We celebrate. This is good. Two more pieces of news. Stretch is climbing a little bit. It's a slow climb, but it's a climb nonetheless. And let's not forget that ATM madness will begin on Stretch whenever we cross 99. So if this keeps going, in a few days we might be at 98, and then it will be, a matter of pennies or a few dimes for us to cross the $99. When we cross $99, E can do the ATM on the Stretch preferred. Now, of course, I'm not a chart person, I'm not a chartist, but to me, the direction from the bottom in mNAV, which we also saw on that chart about September 24, that was also roughly the bottom for Stretch to me. Since then, we have rebounded on Stretch, and Saylor announced yesterday that Stretch would be increasing the dividend again. But October dividend will be increased from 10% to 10.25%. So he increases the dividend of Stretch, he's announcing that, by 25 basis points. And so you can force the price, you can move the price of Stretch by changing the monthly yield of Stretch. That's what Saylor is doing. Saylor is essentially forcing the stock to trade above $99 by increasing the dividend and having people notice, oh wait, the dividend just increased, so the price of the asset has to increase. So he wants to force the Stretch preferred to be $99 or above, and I think his bet is that we're going to get 25 basis points from Saylor. We got that yesterday, so we're going to get that, and then from Powell we're going to get another 25 basis points from the rate cut. So the delta between the quote-unquote big quote-unquote, but risk-free rate, or SOFR, right, as we call it, the delta between SOFR and what Stretch is paying is increasing. And if that delta is increasing, that means Stretch becomes more attractive. If Stretch becomes more attractive, that means there should be a bid. The stock should go up as soon as we cross 99. He will issue shares to make it go down, or to just launch the ATM. Let's remember that Stretch was the most successful preferred IPO of Saylor, and it was also the most successful IPO of this year. So this is piece of news number one. And then piece of news number two is, of course, the $1 trillion end goal. But I'm just going to talk about that. And it's a talking point. I'm going to talk about that towards the end of my quick review of the latest interview. The latest interview of Saylor dropped 20 hours ago from Bitcoin Magazine, 23 hours ago on Bitcoin Magazine. Of course, you have the soundbite, which is Michael Saylor says the endgame is to accumulate $1 trillion worth of Bitcoin. We'll get to that in a second. This interview has a few nuggets. Like I said, I've listened to every single Michael Saylor interview since the beginning of this journey. I don't think I've missed one. So I think I can spot the nuggets, the new stuff. So let's talk about the new stuff. Okay, first of all, moving from a Bitcoin hodler to a creator of Bitcoin-backed credit instruments. Of course, he always highlights this transition from defensive to offensive to maximalist strategy. Now being a maximalist, right? But talking about the early days of strategy was being defensive. It was about not being debased for their cash. Now they view themselves, of course, as a creator of Bitcoin-backed instruments. So the equity ATM, the common ATM on the equity is going to stop at some point. This is not the era we are in right now, but give it 6 months. We might be in that era where common ATM is essentially gone. It will be interesting to see if he's ATMing right now. We'll know next week. It will be interesting to see. So new takes. He says that, of course, his goal is to be an issuer of Bitcoin-backed credit instruments. And so he's trying to disrupt, for example, mortgage-backed securities. Mortgage-backed securities being backed by your houses. And most likely, a lot of houses have monetary premium. A lot of houses are purchased because people think they're going to go up in value. A lot of houses are not purchased for their true utility value, which is just to house you. Right? A lot of houses are purchased as investments. I'm thinking especially those expensive ones, right? And they're mortgage-backed securities who are based on these homes who are likely a little bit overvalued, just a tad if we demonetize real estate over time, which I think will happen. Better than government debt, that's the goal. And of course, government debt, the future coupon is essentially a result of them being able to print more money because the taxes don't cover the expenses of government. So really, there's more deficit every year. So really, government debt is a bet on the ability of the government to print more money. Municipal debt, municipal debt, that's going to be a mess. If real estate drops in value, that's going to be a mess out there. So the goal is to say that Bitcoin-backed credit instruments is better than all of these. Bitcoin-backed instrument, according to Saylor, is also better than debt backed by cash flows. This one, in my view, is the most arguable. If Nvidia issues some debt, I would argue the cash flows of Nvidia are pretty darn solid. So I personally think the debt backed by cash flows for the best businesses out there, that debt is still going to be pretty valuable. But of course, Saylor is speaking his own game here, talking about Bitcoin-backed credit instruments being better than debt backed by cash flows. That's technically true, but because of course the Bitcoin you have on the balance sheet is there. It's there. It's sitting there. So yes, I agree with Saylor. It's technically true, but some companies can have very, very solid cash flows, and debt backed by cash flows, I think, is going to hold up fairly well compared to, say, a lot of debt backed by, I don't know, like a mortgage, for example, or the cash flow of a family, for example. And then it's better than debt backed by gold. Now, that type of debt is mostly gone. Debt backed by gold is mostly gone, as most countries have moved to a fiat standard. And so that's why, if we move back to a Bitcoin standard, it is true that Bitcoin-backed credit instruments should be at the top of the list, and certainly better than, say, government debt or mortgage debt. At least that's the view of Saylor of the future. That's his view of the future. I mostly agree. I also like high cash flow businesses, but I mostly agree, and it's true that if you, anyways. I ramble. Moving on. Another nugget is Saylor. Is Saylor setting its sights on Switzerland? What's going on? This is the first time I see Saylor talk so intently about Switzerland. I mean, we're used to him talking about the EU, used to him talking about Japan, but he's talking about Switzerland and how negative the rates are over there still, and how it's very, very hard to earn any yield over there. And so I asked AI about this. AI does not seem to find any Bitcoin treasury companies in Switzerland. AI did not find any. So is Saylor planning some sort of a credit instrument in Switzerland, maybe before the EU? Because of course there's Bitcoin treasury companies in the EU. There's competition in the EU, right? You have the blockchain group, you have a few other ones, Sequence. There's no such thing, apparently, according to AI, as a Bitcoin treasury company in Switzerland. So perhaps, I mean, that means I would have been still right. He's setting his sights on Europe, just not the European Union. So maybe he's going after Switzerland. I don't know. He talked at length about Switzerland in this interview, which is the latest interview. He also talked about Japan, but I've already heard him said that Japan was off limits for them and that MetaPlanets, it was essentially their game and they'd have a much easier time in Japan, which tells me that he tried to do it in Japan and probably said, oh, it's probably easier for MetaPlanet to do it. So maybe setting his sights in Switzerland, that would be pretty interesting, especially with some of the issues that they've had with their banks over there. Anyways, like UBS and Credit Suisse. Anyways, moving on to other nuggets. Saylor hates the diversification discount. This discount, and this is me speaking here, but of course the diversification discount is when a business is complicated, it tends to trade for less than the sum of its parts, This is the plague of companies like Berkshire Hathaway, right? If you look at Berkshire Hathaway and try to explain it by how much Apple stock they own, you're kind of left wondering what's the value of the 80 businesses, wholly owned businesses that they have. There's an enormous diversification discount, which you don't see if you were to break up a company. I could make the same case for Google. I would argue Google has a huge diversification discount. You have Google GCP, which is a competitor to Microsoft Azure, a competitor to AWS. You have Android, which is a competitor to Apple. Google has this big discount, and to me, the best way to look at this is, standalone YouTube would probably be 1.5 times the Netflix market cap. At least that's my view, that YouTube is much more valuable than Netflix. So and also, Google, they own 7% of SpaceX. Is that reflected in valuation of Google anywhere? So this is the plague of a lot of companies, the diversification discount of a complex businesses. Some of these companies have conference calls that are hours long. I mean, close to 2 hours long for a lot of these big tech companies because they're so complex. So Alibaba, Amazon, they suffer from a lot of that difficulty that investors have to assess them. So what does that tell me about strategy saying that? And of course, Saylor said that out loud. Strategy will not do mergers and acquisition. Strategy is not looking to buy Marathon Holdings, Bitcoin miner. Strategy is not looking to buy something like a Saylor Scientific with a medical business. They're not looking to be in the business of operating businesses. They're looking to be in the business of taking their Bitcoin and issuing debt against their Bitcoin and making it as simple and as easy to understand as possible for the market to give them a premium, presumably a premium on the common, to reward the shareholders. And as Saylor said many years ago, he only works for a common shareholder. He respects other holders, but he only works for a common shareholders. So my read on this, of course, further confirmation. I saw someone in the comment section the other day asking about the $21 billion goal target that he had on the converts. Yeah, that's gone. He had said he would do 21 billion of converts. He's changed his mind. He's not going to do 21 billion of converts. Converts are gone. They'll be redeemed. Converts are obscure. They're complex. They're not well understood. He doesn't want that in the business. So that's my first read on this. My second read of this is he's going to double down on preferred, of course. But my last read on this is a spin-off of the software business back on the table? Is that back on the table? Because you still see the automated news outlets, the robot news outlet reporting on the software business and reporting, numbers that don't make sense for MicroStrategy, like their price to sales, for example, which doesn't really make sense at all for MSTR because MSTR is in the business of selling equity and preferred equity. MSTR is not in the business of selling software packages anymore. And so, could it be a spin-off of a software business coming? That would perhaps make the business more easy to understand. We'll see how this goes. But he doesn't want to do M&A, and I understand him. The end game, though, and that's what's trending on X right now. The end game, he said, is to one day hodl 1 trillion worth of Bitcoin. And I understand the soundbite, and I understand the number, and it sounds really good. But, to me, that's just a soundbite because, in my view, that's not a far-fetched goal at all. This is stuff that's probably going to happen before 2030. This is not a far-fetched goal at all. Why? Because they already own 75 billion worth of Bitcoin. Throw another 12 months, they may have maybe 100 billion worth of Bitcoin. And then throw Bitcoin reaching $1 million, maybe in 2030, maybe a little before, maybe a little after. And boom, you got $1 trillion, right? So maybe Bitcoin hits 500,000 in 2030, but he acquires so much more because he's successful with the prefers, or maybe he just sits tight and doesn't do much for the next few years and just let Bitcoin's takeover just help the company rise to $1 trillion. So to me, I understand why he said this number, and this number is trending, and it's really, really good. And I understand why even Bitcoin Magazine is promoting this as the title of their interview. But if you followed this strong strategy for a long time, if you followed strategy for a long time, you're not surprised at all by this number, and you may have higher targets than that. Actually, let's not forget that we have many $1 trillion companies nowadays. Nvidia is a $4.5 trillion company. $1 trillion company is not as far-fetched as it used to be. I remember a few years back when Apple hit $1 trillion a year prior, they said, oh, Apple will never hit $1 trillion. We'll never see $1 trillion company. Let's not forget that we will see 10, 20, and $30 trillion companies as the dollar gets debased. And so to me, this is not shocking at all. This is the medium-term endgame. Let's call it the medium-term endgame. And of course, I'm a holder of the common for the very long run. Anyways, this was not financial advice, not investment advice. This is only entertainment. I'm hoping you were entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.